The stink bid. Yeah, the stank bid is back in this Toronto real estate market right now. Is it true? Yeah, I'm gonna be breaking all of that down and whether this stink bid actually can get you that house of your dreams in this current market. So make sure to stay tuned for that. Now, if you're looking for some help on how to navigate the real estate market, you can do so by booking a call with me using the link that's on the screen. It's right here. It's www.chatwithzen.com. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zhen, and if you're enjoying the content I'm putting out there, do me a favor and like and subscribe. Homebuyer tactics. The stink bid is back. I don't think the stink bid ever left. There's always buyers out there who will stink bid you, even in seller's market. But I guess it's more common now because the market's a little bit softer, right? And I can tell you that low balls are very, very common, especially if the buyers think that the market's going to crash, but they're still buying for like, say, whatever personal reason, or they're just trying to get a deal. So they always still exist. The question is, are sellers accepting stink bids? And I would say, yes, they are. But I would say at the moment right now, your opportunity for higher probability of a seller accepting a stink bid probably just kind of dropped a bit because interest rates got cut. Now, if you are a buyer using the stink bid tactics, well, that's kind of a tongue twister. You basically have to strike when it's peak fear and there's a lot of motivation for the sellers to let go of it for a lower price than what they thought it was worth. So when you have rate cuts, the sentiment changes for the sellers. They're like, oh, here comes the first rate cut. There must be more. Why am I accepting this lower offer? If I wait another few weeks on the July rate cut, another few more weeks after September, another rate cut, I will probably get my price and I only have carried this for a few months and that's what it's going to cost me. Will I get more than that in the future? Yeah. And that's a conversation that mentally that we have to talk through with all of our sellers and also when people call us, because that's just the thinking, right? Your best time to strike would have been when the interest rates didn't get cut yet, so that the sellers were the most afraid. And yes, it's the hardest thing for buyers to buy on the way down, thinking that it infinitely goes down. But now that, call it, rate hikes or even rate pauses are behind us and more rate cuts are coming, the sellers are more likely to hold out, right? So I think the stink bid may not be back for that long. So in this article, it basically says here that the sellers, meanwhile, are not grasping for any offers that lands, even if they have a lowball offer. And they're anticipating that easing interest rates will draw more buyers into the market. And yes, that's the thinking for sellers. And I've said this in the past before, and some time has elapsed now. We're still getting a boatload of listings right now. It's actually quite, well, not surprising for me because I knew there was going to be pent up sellers, but I think it may surprise some as more and more kind of non-real estate focused YouTube watchers chime in and understand what's going on, right? So I think right now, the months of inventory in the 416 for condos is like at 5, and we're just cresting at like 3.5 months of inventory, for almost midway through June. So it's not great. Inventory is piling up because more sellers are coming into the market, and the quarter basis point rate cut didn't affect the market nor the affordability, like I've been saying for some time. So the premise of this article is just interviewing an agent in kind of like the more higher end pockets of Toronto. So, your Hogs Hollow, Yorkville, Bayview area, Lawrence Park, and basically saying that the people who are in that pocket who have a very expensive home, they're generally not that rate sensitive. Most people, if they're buying these homes, are not going in 20% like down payment because to qualify for a size of that mortgage on say $5 million, you need to qualify for 4 million, loosely call it, you need to be making $1 million a year. It's not that it's not possible. There's a lot of people in Toronto who make that as an income. It's just most people won't be going for that. So they're not taking on that much leverage. So people who may have taken up that much leverage are people who would have been redeveloping old bungalow homes where they essentially bought the land, tore down the bungalow, and now they're using a construction loan to build a very expensive home. And those expensive homes aren't selling as fast. And those are the people who are probably underwater a little bit right now. And maybe they're actually going to try to fire sell in that area. But if you're trying to buy like someone's really expensive home who they've had for 5-10 years, it's probably not going to fly unless, there's a catastrophic situation where they have to sell and, maybe they over leverage by refinancing it. But those are kind of rare and in between. Where I will say there are some opportunities are if you're looking in the condo space. I've said many, many times before. The first time home buyers, you really should be back out there right now looking to see what's out there. There's never been this many inventory in Toronto for condos right now. There's an abundance of choices. Investors are still offloading because the numbers don't make sense, and inventory continues to grow. So you have your choice of selection right now. Now, what I will say is this. The really, really pretty condos are still selling, right? Because if you think about it this way, if there's 10 condos on the market, there's 1 out of 5 of them that will sell, meaning that by statistics, 2 of the 10 you picked should sell. Now, how quickly those 2 of 10 condos actually sell is just going to depend on how many buyers in that little kind of pool there are, right? So when you talk to our team or your realtor, they should be able to find out that for you. So there is precedent that yes, you can't 100% find a deal, but the problem is everyone flocks to the prettiest looking condo with the best layout with the best view, right? So the analogy I've been giving, kind of crass, is this, right? If you have a girl at a bar who's the prettiest girl, but she just got dumped and has emotional baggage, are dudes around her still going to hover and try to pick her up and kind of talk to her? The answer is yes, even though they don't know what's going on, right? So it's the same analogy as if that seller has the prettiest condo, but they're really motivated because they're bleeding out the wazoo, but they still have the prettiest condo, they're still going to have a lot of people circling around and trying to look and buy that property, right? So that's why the priced right condo that looks good, has a good floor plan and good layout is still going to sell. Like there's a lot of inventory, but not that no one is buying. So the idea of like the stink bid, yes, they work, but you're stink bidding on something that most people don't want. And the seller who's going to accept the stink bid is probably the person who isn't getting any showings. The one caveat to all of this, where I'll say is if the listing agent for that said condo did a very bad job on listing the condo and isn't attracting the eyeballs and they're not getting showings right now, and then you go in there and you see that it's actually a good property, you just got to clean up a little bit or just really bad photos, that's where a stink bid will work, because if the seller has been on the market for 20 to 30 days and they're not getting showings, they're like, uh-oh. You see what I mean? So you have to apply a lot of different things to understand the kind of psychology of the seller. And if you find the right one where they've been on the market for some time, they're not getting showings, yeah, the stink bid has a higher probability of working. But if you're going to stink bid the property that's listed perfectly, right, exactly where it should be in terms of what the market value is, and it's like staged, really pretty photos, it's vacant, you can go in anytime, yeah, I don't think you're going to get that to go in the first week or so. So just be mindful of what you're stink bidding. Now, further down in this article, it says that a mortgage specialist says that the Bank of Canada move sparked some optimism in buyers, but many will still continue to wait for better affordability. And I can tell you, that's exactly what we are seeing right now as well. The first-time homebuyers aren't necessarily back out right now. The few people who need a home are still looking, but the ones who, generally have accommodation, call it underpriced rental, or they're living at home, they're not motivated to buy anything right now because they weren't using a variable anyways, as I've been saying, which means that they're waiting for the fixed rate to come down, which can come down as the variable comes down some more because of the bond market kind of moves with it, right? Even though it's future looking. But 25 basis points isn't moving the needle, like I said, right? So from his view, sales activity is more likely to pick up after a second and third rate cut if the central bank's policy setting committees eases again in September and July. And this is what I was telling a lot of my clients too. If we see that second and third rate cut right before fall, I think there will be some activity that picks up. But if we just see one rate cut, I don't know, probably like a little bit more activity because it's a fall, but like I would expect similar kind of, sales activity as like March, because like it kind of died off in April, right? And now many homeowners and potential buyers are watching for the fixed rate to fall. And that's exactly what I said, right? Like the variable is so much higher, which is tied to the Bank of Canada's interest rate. It's so much higher than the fixed right now that not many people are really looking at the variable. Until we really see the fixed rate come down, I would say like below 5 for like all product types and getting close to 4.5, I don't think we're going to see like normal activity come back. So instead of watching the Bank of Canada rate cut, which yes, does kind of influence the bond market a little bit, I'm just going to watch the 3-year fixed rate because everyone is buying with that right now. And until the variable gets down to that or the fixed rate comes down to like 4.5, I think we should continue seeing the same type of market right now. And my biggest concern really is how many sellers are going to continue coming to the market and how much inventory is going to roll into fall. Anyways, hope this gives you an idea of what's going on. Again, I promise you I'll be giving you updates as what the active listings look like right now. They're still higher, hasn't been absorbed yet. Buyers aren't back yet. So that's kind of what I'm seeing. So what we thought about the market, not rebounding after 125 basis point rate cut, it's coming true, I would say. Anyways, if you do want to talk to me about your real estate needs for the rest of the year in 2024, whether buying, selling, or investing, you could do so by booking a call with me using the link that's right here. It's www.chatwithzen.com. Until next time, your move, your future. So yeah, now that you're done watching this one, how about this one or this one? You know what? Just watch them both.